Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Sunday, November 30th, but this analysis is for Friday the 28th, which was the last trading day of the week after Thanksgiving. Hope everybody had a nice Thanksgiving holiday. Let's get into it. Here's a daily chart of the SPY, and you're looking at what appears to be some more bullish consolidation going on. We could see higher prices into early this week. However, I want to point out something very interesting. You had a little bit of a sell-off in the S&P on Friday, which it didn't amount to much. It was about 5 points or 1/4%, and that's really nothing right before a holiday week. Normally, we would get a float up into the holiday weekend, but nevertheless, 5 points is more of a rounding error than anything else. But I want to bring up something a little interesting. And you know, this is my favorite indicator. This is the IWM, or the Russell 2000 index. The Russell 2000 was down 1.5% on Friday. Now, if that's not a tell, I don't know what is. So what was the reason why the Russell was down 1.5% on Friday? Now, here's an intraday chart, okay? And right out of the chute, all right, you had, here's 9:30 in the morning. You had a down candle. You had some upward move, some consolidation, and then it fell off the cliff all the way into the end of the day. Now, what happens is the Russell and the NASDAQ are your risk indexes. They're the ones that contain the more risky assets, and they're the ones that investors think that will rise in a bullish market more so than the Dow and the S&P. But conversely, it's also the index that will fall more precipitously in a bear market or a correction. And what I thought was interesting was, for no apparent reason, and nobody discussed it, we had a sell-off in the Russell of a 1.5%. Now, I think that's a tell of what's more to come, and this is bearish consolidation here towards the end of the day. For the entire afternoon, we just went sideways, and that portends to another down move. So we'll see what happens on Monday and how it plays out. But as you know, I've been telling you that I believe that a correction is in the cards for, let's say, the first week or so, maybe even 2 weeks of December. And then we should have an end-of-the-year rally, a Santa Claus rally, which is right around Christmas time, and then a rally into New Year's, and then we'll see what next year brings. And I've been telling you I'm going to have a forecast for 2015, and I'll provide that a little bit later on in December as we get closer to. I'm kind of refining it, and I want to see what happens. I want to make sure that we have a correction that I've been looking for, because if we don't have a correction, let's go back to the SPY real quick. If we don't have a correction in the SPY, I'm going to go to the daily and just reiterate what I've been saying is a likely correction. Here's a pivot high. That would be one stopping point for a correction, albeit a shallow one. That would be right around the 201.82, call it 202 neighborhood. That would put the S&P at about 215 to 220 neighborhood. I'm sorry, 2015 to 2020 neighborhood. And if we went farther than that, we'd probably come into the 50-period moving average, which is upsloping because we do have a rising market. So by the time we got there, this might be about 199. It's 198.5 right now. And we'll have to see what happens, but if we don't get that correction I'm looking for, then something else is going on. But even if we do or we don't, I still think there are higher prices coming in 2015 in the S&P, the Dow, the NASDAQ, and all the indexes and all the stocks, or most of the stocks anyway. So what will happen is, once I see the correction take hold, and if it's a normal garden variety correction, then everything will be on target, and we'll go from there. So let's move over and let's talk about the elusive crude oil market. This is the USO, talking and typing. Okay, so here's the USO, and as we know, everybody knows by now, the oil market completely fell out of bed on Friday following the Thursday OPEC meeting where they did nothing. They were either going to do nothing or they were going to cut production. And they chose to do nothing. And by the way, even if they said they were going to cut production, they would have never done it anyway. They never do. But but they did nothing, and the oil market fell out of bed. And the crude oil market closed at 65.99. That's where it sits right now. So where is crude going? And by the way, I was telling you that I thought 72 would hold, and I was wrong, and 72 didn't hold. But what I also told you was don't take any positions in the energy sector, namely the crude oil, but energy sector, because we're going to let the market come to us. Well, guess what? The market is a-coming. And whether the bottom is 65 or 60 or anywhere in between or some other number, we don't really care. What we care about now, we're not going to pick a bottom. What we care about now is seeing a reversal pattern. And what that would look like to us, or anybody for that matter, it would look like a high volume day. We would make a low, we would reverse up during the day and usually finish positive. And that would be the first sign that we saw a reversal day. And then there'd be other indicators from there, and we'll go over those when it does occur. But that's now what I'm looking for. Until I see a reversal day, okay, then we're not interested in the energy sector, but we will be interested in the energy sector because a reversal pattern will occur. So what we're looking for is a reversal. We're looking for the crude oil to reverse, and that will put a reversal into a lot of the stocks. Now, let's just take a look at some of the stocks that took a real beating on Friday. ExxonMobil, down hard. Chevron, down hard. Okay, Conoco, down hard. They all look the same. All these markets look the same. One of the favorite, I know one of the favorite MLPs that a lot of people play for yield is Linn Energy, and Linn Energy is down at 18 and a quarter. Okay, this was 23 like 2 days ago. All right, that's an enormous sell-off in 1 or 2 days. That just is taken out behind the woodshed, shot twice, and left to die. Okay, you have, let's see, you have Transocean, okay, bloodbath. You have Schlumberger, bloodbath. Okay, all these stocks. This could be a bottoming tail with a high volume bottoming tail. We're going to keep an eye on that one. All these stocks were taken out and beaten. So what that and by the way, everybody is just getting super ultra bearish. Okay, let's call it uber bearish. And when everybody gets uber bearish, okay, we're going to start looking for signs of reversal. You have talking heads, you have analysts, you have anybody that has anything to do with the media, blogs, and anything that they have a stake in the game. They're just super bearish. I like that because the more bearish they are, the more I know that there's going to be less sellers left at some point in the near term. We're going to see the reversal day, and when we see the reversal day in crude, we're going to see a reversal day in some of these stocks, and my members are going to get alerts because they're going to hop on and we're going to play a big bounce in some of these names, and we're going to take 10 or 15% right off the chute in a day or two. It always happens that way. It's going to happen again. It doesn't feel like it. It never does, but it always happens. So I've got my eye on it. I'm going to let you know when it occurs. The members will get alerts, and they're going to make some fast money real quickly. Okay, let's go over to the gold market, and we're going to take a look at the GLD because that also, well, that didn't work. That also had a bad day, right? Talking and typing. That's unbelievable. The GLD was down pretty hard, but also we're inside of this big green candle here. So until we close below this green candle, which is at 10.65, we're still okay. And this could be considered a corrective pullback. So, you know, what happens in a corrective rally or any kind of rally or any kind of correction? You had a low. We make an A, B, C pattern. That's definitely a possibility, right? Off the low, A was up here. B comes down. Whether we go down a little bit lower or not, I don't know yet. And C would be another leg up. So this doesn't scare me. And even if we come below this green candle and we take out these lows, either we go to a double bottom here or we take out the low here. If we take out the low, They'll run a lot of sell stops that exist in the gold market right below this low, and that's how traders are. They put stops in right below the low. They'll get taken out, and then gold would reverse back up. And if we see a reversal on high volume, that would be a good indicator that we have another bottom. And we would play it to the long side. And I think that one would be the bottom that we play to the long side. So we'll see what happens, and we'll play it by ear. We'll play it by the charts. We just let the charts tell us what to do. Okay, we're not going to pick a top. We're not going to pick a bottom. We're not going to pick a day when something should happen. We just let the charts tell us what to do. Okay, we do know in terms of gold that there is with Japan and the ECB in Europe, they're trying to create inflation. They will create inflation, or they will at least create the perception of inflation, and that will push gold prices higher, and that's coming. That will happen, okay? So we're just going to look for the signal that it's going to reverse, or it did reverse, and then we'll hop on. The members will get alerts as usual, and they'll play it to the long side. Right now, we're not going to play it to the short side, and we're not going to try and pick a bottom. We're close enough now to this double bottom where I'm not really worried about it. And let's go to a longer-term picture here and just show you something. On a weekly basis, okay, if we close below significantly low on a weekly basis, below 109.67, with any conviction, then something else may be going on, and we'll play it by ear, and we'll analyze it at that point. But until that happens, we're going to assume that gold is going to bounce eventually, and we're going to move higher. But until you see this weekly red bar here, until we close above 118.48, okay, this is considered still in a longer-term bearish picture, okay? So that's the take on gold. So we'll let the charts tell us what to do, and until further notice, there's really nothing going on. USO. I want to cover USO, which tracks the dollar, okay, because, I'm sorry, not USO, UUP. That was the oil chart again. Okay, UUP. So UUP is the ETF that tracks the dollar, and I don't talk a lot about this, but what I do want to let you know, and I want to draw in a line here, okay? This is going to be a rough draft because I'm not doing it by the numbers. I'm doing it live with you, okay? And it's not letting me do it. I hate when that happens. Bear with me, folks. Let me try it one more time, okay? One more time, I promise. And then I'll just talk about it if it doesn't work. It's not working. Oh, maybe. No, not working. All right, I don't know why that happens. I hate that. Okay, so what I wanted to show you was if you can picture a line that goes from the tops here through here, okay, through here. Even if I go to a monthly chart, let's see if the UUP has a good monthly chart. I know the dollar does. Nah, that's not a good monthly chart. The dollar has a better monthly chart, but I don't have the spot price of the dollar on this chart here, on this platform. I have it on a different platform. But if you look at this, this is a reverse head and shoulders pattern. So when we broke out here, okay, this is telling us there's higher prices coming in the dollar. And as it relates to the dollar itself, which right now is trading at 88.40, okay, last price was 88.40, we're looking at par or better, meaning 100 cents on the dollar, where we haven't been in a long, long time, or probably even surpassed that a little bit into the next year or so. But nothing moves in a straight line, and you're going to have pullbacks. And this is a parabolic move, okay? And this move has to pull back at some point, and I believe it's going to pull back shortly here. And the pullback could probably come into this pivot high here at, let's call it 23. And at 23, we're at 23.50 on the UUP, so 50 cents lower in the price of the UUP is quite a move in the price of the UUP or the dollar. It's a significant move in the dollar. That would put us around 85 on the dollar, let's call it. And if we pull back to that level in the dollar, you could expect higher prices in some commodities, gold, some other soft commodities, silver. You know, the soft commodities, what I mean by that is some of the things like, what am I looking at? You know, you have coffee and soybeans and orange juice and all those things, okay? So those typically rally when the dollar pulls back, and they typically fall when the dollar rises. That's what's been happening lately. So you're going to expect a pullback in the dollar and a rally in commodities. And the members received an alert on Friday to that effect, and I issued an alert for an ETF playing that scenario. So we'll see how that plays out. So I just wanted to point that out because I think it's important. And also, as we pull back, and I expect to pull back shortly in the dollar, we'll get that pop in gold that we're looking for, hopefully. So anyway, that's about a wrap. Hope everybody had a wonderful Thanksgiving holiday. If you want to see some of the trade alerts, come over to the website, mystrategicforecast.com, and you can sign up for a free trial, and I'll give you the trade alerts that the members get on a regular basis, and you can make your opinion from there whether you want to become a subscriber or not. And the next update will be on Monday evening after the market closes. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks.